Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone for supporting the channel, all the viewers, all the subscribers. Immensely appreciate the support. For today's video, I'd like to jump back into options trading on the Robinhood platform, this time showing you guys how you can close out your call option without letting it go to expiration. As you can see here up on screen, I made a call sell with APLE, Apple Hospitality, $20 call, 118.19. Essentially what this contract means is that I'm obligated to sell APLE, Apple Hospitality, for $20 per share on or before 118.19. You can see on the bottom here, I initially did this particular contract, 2 contracts. You can see -2, meaning I sold off 2 contracts from the portfolio. Average credit was 25 cents per share. Again, each contract is 100 shares, so essentially $25 per contract. You can see that sum on the bottom here, a $20 call sell, 118.19 for $50 on May 29th. And since that time, you can see here that the price of APLE has dropped. As a result, the contract price has also dropped as well. You can see currently it's trading for 15 cents per share or $15 per contract. So essentially overall, I've made $20 on this particular trade. Again, I bought each contract, or excuse me, I sold off each contract for $25. 2 contracts got a credit of $50. Now, because each contract is trading for $15, if I were to buy that contract back, I would essentially make $20 because I got $50 minus the $30 I'd have to spend on the contract would equal $20 total return, as you can see in the middle, or 40% on this particular trade. So how do you close out a contract? Again, I sold off a contract, so now I have to buy that contract back. You can always tell that if there is a negative number in that contract, essentially it means I am down 2 contracts. So I would have to buy those contracts back. It's very easy to do, and we'll do that here real time on the Robinhood platform. Again, for you guys that are new to the platform, anytime there is a white background during the video, that means there is active hours trading going on. And you can see here a white background, meaning that we are in active hours trading. So to buy back your contract, simply go to Trade, View All Options. Now on the top there, instead of doing a sell call, we'll do a buy call here. We'll go to that same options contract. Again, if we scroll through, there are a number of different days for contracts. Depending on the stock, there may be just a few like APLE or there may be a lot of different call options like AT&T, for example, T. There are essentially 20 different options. For this one, there are only 4. But take a look at the $20 call. You can see -2. That means I have sold off 2 contracts there. Again, instead of doing the sell call here, we'll do the buy call. So we'll buy those contracts back. If we click on the button here, you can see I can go ahead and buy back 2 contracts, 15 cents per contract. If I go ahead to execute this contract, you can see on the bottom exactly what we're doing. You're paying $30 to buy back 2 open contracts, which will release collateral and remove your obligation to sell 200 shares or 2 contracts. Each contract is 100 shares of APLE for $20 per share on or before January 18th. Let's go ahead and do that here. Again, I'm spending $30 to buy back 2 contracts. You can see at the moment it is in queue. One thing to consider with these contracts is that the volume is very low. So let's go back over to APLE, for example. We'll click on the trade, view all options. This time we'll see what type of activity is happening with this contract. Again, we are not going to be doing the sell call. We'll do the buy call again. We'll click on that particular contract, $20 call, -2 contracts. Again, meaning I sold off 2 contracts. To go up the right-hand column there and click on the open contracts, you can see bid, there are 0 bids here. On the top there, bid, $0 times 0. Last sale, 25 times 1. So right now there are no contracts that are open. You can see ask there, 30 cents times 40. So the volume here is very, very low. This is not like the stock that's trading with hundreds or millions of shares per day. This is a very, very low volume type of trading. So that's why a lot of viewers on the channel, when you put in contracts, the contracts may never execute just because of the low volume. And if we go up, let's say you want to go all the way up to the $35 call here, for example. Again, click on that right upper hand corner. You can see, again, bid, 0 contracts. And most of these will have 0 contracts on them. That's just the way contracts work with options. There are not a lot of contracts open. You can see again, bid 0 on this particular contract as well. And you'll see that this is pretty much the same for most contracts on the platform here. There are very few stocks that have high volume with options contracts. So I hope that made sense. Again, just wanted to put out this video in response to a number of viewers out there wondering how you can close out an options contract, how you can close out a covered sell on the Robinhood platform. Essentially, instead of doing the sell call, you do the buy call, you buy your options back, and you can close out your contract. So I hope that made sense. If you guys have any questions about exactly what we're doing here, please let me know in the comment threads down below, and I'll do my best to get back to you guys as quickly as I can. So not to make the video too long, we'll kind of end it here. Again, if you guys have any great stocks that you are doing, swing trades, dividend capture, long-term buy and holds, please let me know. Always looking for new stocks to add to the platform. And again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. And until next video, we'll see you then.